Hi friends, welcome to JD's Guidance once again. This is the video about Introduction to Management Accounting. So in this video we will simply see what are the different branches of accounting, how are they different, and what is management accounting all about. So in our discussion we will be concentrating on three things. That is, we will first talk about the different branches of accounting, and then we will see what are the differences between the different branches of accounting, and the last one we will be able to see what is management accounting all about. Now friends, we have to first understand what is accounting. So actually there are different definitions as given in books about accounting. Now but the sum and substance is that accounting is nothing but it is an art of recording, classifying, summarizing the business transactions. What you are doing is that you are trying to make a record of all the business transactions, and after you have recorded you try to analyze that. Okay, after analyzing you summarize. What you are going to summarize? You are going to summarize the results of a business. You want to summarize how this business is doing in terms of its profit, in terms of its assets liability position. And once you have summarized, what is your duty? Duty is not over. You want to communicate this information to different users of this information. So there are some people who use this information. So this is what is called accounting. So accounting is nothing but it is the art of recording, classifying. After recording comes classifying, then comes summarizing, and then communicating the results of operation. This part is very important, that you are trying to communicate the results of operation of the business. To whom you are communicating? To interested parties. So we have different interested parties who are interested to know the business position. So accounting helps that. Accounting is called to be the language of the business because we use language to communicate. So similarly, accounting is a language which communicates the business information. So this is called accounting. Now over years, accounting has developed like a tree and it has spread its branches. So generally, actually we have got three branches of accounting. This is financial accounting, cost accounting, and we have the management accounting. So accounting has got three important branches: financial, cost, and management. What is financial accounting? Financial accounting is all that I told you, that financial accounting is the art of recording, classifying, summarizing, interpreting the results of business operations and communicating this information to the various users of information, those who want that information, or various interested parties, or you can say users of financial information, right? Now what is cost accounting? Now over years we have seen cost has become a very important part of the business, and we need a separate branch of accounting which simply deals with cost. So that branch of accounting is called cost accounting. Here what we are doing? We are trying to make an ascertainment of cost. We try to analyze the cost, okay, cost information with the help of facts, data, etc., and then we try to use that information to take some decision in the business. So cost accounting is dealing with recording of cost, analysis of cost, and then communicating that results or making these results available to the management for taking decision. So this is called cost accounting. Whereas management accounting is a very means compared to this is a new branch of accounting, where this accounting deals with all those information of the business which will be used by the management. We are not interested to take any information which is not useful for management. I mean, management accounting is that branch of management which makes use of data, facts, figures to take decision, useful for management to take decision. Now you will say all the branches are useful to management. Yes, financial accounting generally looks for, you have two types of users of information. Here I told users, you in financial accounting or any kind of accounting, you have two users of information. One is internal users and another one is the external users. External users means like the investors. I want to invest money in the business, so I am interested to know the results of the business. It can be the creditors who has given money to the business. It can be the person who has supplied you goods. It can be your supplier. Okay. It can be the tax authority who wants to see. It can be the regulator of the country. It can be the government who is interested. It can be the researcher who is interested to see for the information. Okay. So these are the external, because they are not inside the business. Whereas internal users are those users who are inside the business, like you have the management, you have the employees. They are the users of the information, but internal. So remember, financial accounting is generally designed to help the external users in getting the information. So they are more external oriented. The reporting in financial accounting system is such that it tries to cater to the needs of the external users. By reading the balance sheet, profit and loss account, we as an external users can take some decisions. Whereas management accounting is mainly internal centric. They are trying to give all those information which is useful to the management for taking decisions, planning, etc. Planning, decision making and control. So management accounting provides all the facts, figures, data which is useful to the management, not to the external parties, for taking some decision. So management accounting helps in decision making. So management accounting is helpful in decision making, or it assists in decision making. Cost accounting is helpful in cost control and cost planning, whereas financial accounting helps in external reporting. External reporting about what? About the business. So these are the ways by which we can understand the difference between financial cost and management accounting. So we now know what is financial accounting, what is cost accounting, and what is management accounting. These are called branches of accounting. Now we move on to the next, that is what is the difference. By now you at least know what is the difference, because financial is externally oriented, cost accounting only cost related data, information, facts, figures. Management accounting is any information which is useful to the managers for decision making. So it is within the organization. So friends, I have written the differences here, and let us understand one by one. So you will have financial accounting, cost accounting, management accounting. Point number one, objective. As I have already discussed, the main objective of financial accounting is to present the results of financial operation. We want to represent the financial position of the business by way of income statement and balance sheet. We have the income statement, okay, and balance sheet. We use these two statements to represent the financial position of the business. Whereas in cost accounting, we are mainly concerned about cost planning, cost ascertainment and control. We are only talking about cost here. We are not here to give data to the external users, yes, to some extent we help the internal users, but we are not concerned about giving information to the external parties. So here our objective is cost planning, cost ascertainment and cost control. Whereas management accounting is having the only objective to assist management in decision making, give facts, figures, so that the management can be helped in their activity of planning and decision making and control. So we want to help managers in taking good planning, decision making and control. Coming to approach, financial accounting is giving a report how business has performed in one accounting year. So it is historical. So it presents the information about something which has happened in the past. So it is historical. Whereas cost accounting is historical, that also deals about the historical cost data. But it is futuristic also, because when I do cost planning, I have to take into account the past data and forecast the future. So it is both historical as well as futuristic. Whereas management accounting is always futuristic, because I am taking decision, and decision I cannot take for the past, I will take for the future. So that's why it is totally futuristic. Coming to the next, standard of reporting. Remember, in financial accounting we have a set standard. We have to follow that standard whenever we prepare income statement and balance sheet and other statement. So that is called generally accepted accounting principles. Whereas in case of cost accounting, we have certain principles but not as strict as GAAP. And over years, recently we have the cost accounting standards also. So some kind of principles are there in case of cost accounting. But in management accounting, there is no such standard, no such principle. It is the management who will think which data is useful and what information can be extracted. Right. Last point, nature of data. Remember, financial accounting always deals with quantitative data. So you will find only facts, you will only find the figures. Whereas in cost accounting, that is also facts, because you will get numbers, quantitative. Okay, you will get quantitative values. Whereas in case of management accounting, it takes use of quantitative as well as qualitative information for taking decision. So these are the points which illustrates the difference between financial cost and management accounting. Okay, so this is all. There are many points, other points, but these are the simple way by which we can see the difference between cost management and financial accounting. Thank you, and stay tuned for other videos on this